Hello, I'm Louisa Corrett, here for Engaged Investor and Pensions Insight. And with me today is Managing Director and Chief Market Strategist from JP Morgan Asset Management, Stephanie Flanders, to talk about the recent general election impact, results impact on the UK economy and the outlook for the global economy as well. Stephanie, welcome.
Good to be here.
So yesterday, during our speeches, we heard from David Willetts that he thinks that one of Chancellor George Osborne's priorities for this coming Parliament will be raising investment, exports, and boosting productivity as well. How important do you think these priorities are for the Chancellor, and also how feasible?
Well, I think, yes, it's a very important priority. How feasible is another question. I think one of the annoying things for economists about the election campaign is that whatever you thought about the outcome, they didn't debate these important issues on the campaign trail as much as you would have liked. And if you think, as I do, that productivity is really the most important question hanging over the UK, our ability to make more stuff with the same number of people, we've had our output per head be historically very, very weak over the last few years in a way that we've really never seen in modern times. And there's such a puzzle about why that's happening, but it affects everything. It affects how much room for manoeuvre the Chancellor has in setting his budget policy, how much growth in real wages and household incomes you can have over the next few years, and indeed when interest rates will go up, when the Bank of England has to increase interest rates because we sort of run out of spare capacity in the economy. So it's very important. But I think it also, for me, it sort of confirmed, I think David Willetts is right, but in a sense he also is showing that the election result, although it's surprising, hasn't really resolved these very important issues for investors. And the other really important thing for me is not just what's happening in the UK, but what's happening in the rest of the world, because we've found that growth in the rest of the world, and particularly in Europe, has really had more effect than anything else on our fortunes over the last few years. Mm.
So what do you think the outlook is for the Eurozone and the rest of the world now, and how will that impact on the UK economy going forward?
Well, people are feeling more optimistic about Europe since the start of the year. At the beginning of the year, people were very positive about the US and a bit still uncertain about Europe. But quite a few things have fallen into place to make people feel more positive about Europe. But you know, we've seen some volatility in the markets over the last few months, last few weeks. People are maybe questioning and say, okay, we got very optimistic and we saw some positive outcome in the real economy, but are we really seeing a broadening, a deepening of the recovery in Europe, or is this just a quick fix of more money coming out of the central bank? And I think we do think there are genuine reasons to feel positive about Europe, but it's going to be quite a long haul. They have a really tough road ahead, and there's some political risks still out there, for example, with negotiations over the Greek debt deal. That could still cause a bit of volatility for everybody.
And one of the things you spoke about in your speech just now was Britain's relationship with Europe. What sort of impact do you think the referendum, which is now more than certain to happen under a majority Conservative government, will have for investors?
Well, it's been a big question mark already hanging over the economy, and people worry that with a referendum you're going to have a further period of investment being held back, or at least people who are wondering about building a factory in Britain will maybe delay. I think the only thing that I would say is that we obviously have an issue around Europe that's on the table, even if we didn't have a referendum in 2 years' time. Yeah. And so in a sense it might even be better to get it over with sooner rather than have it happen in 5 or 10 years' time. And I would also say that it's interesting that, again, this question of broader confidence often is more important than these specific things. I mean, in the last year and a half, although we had all the uncertainty around the Scottish referendum and around the general election, actually business confidence has been very strong, the strongest it's been in this recovery. Investment's been picking up. So yes, there may be a negative effect. I'm worried a bit more about the outcome than I was before, because I think that this government will find it, with a very small majority, it might find it harder to keep the sort of anti-European forces in check. I think a bigger factor is that you have very pro-European parties, Labour and the Liberal Democrats, both very in disarray as a result of this result, so maybe they will be in a less good position to campaign to stay in. All those things make me a bit nervous about a referendum, but given that it was inevitable we'd have a referendum at some point, maybe it's no bad thing to get it over with.
So a bit more uncertainty ahead. Stephanie Flanders, thank you so much.
Thank you very much.